In Chapter 9, we're going to talk about sales and cash receipts. Would that be accounts payable or accounts receivable? We're going to talk about sales and cash receipts. Would that be accounts payable or accounts receivable? Accounts receivable. Our customers are purchasing things from us. We're going to record it as a sale, and some of them may pay cash. Some of them might say they're going to put that on account. Now, when we talk about accounts receivable, that's not when people use their credit card to make a payment for us or a purchase from us. A credit card sale is just like a cash sale. Right? We just send that off and collect the money. A lot of places we've talked about before don't take American Express because it's a higher processing fee for American Express. MasterCard, Visa, Discover, and I think Discover's accepted just about all places. At one time it was not. So when we talk about cash sales, we're talking about credit card sales too. But when we talk about accounts receivable, that's an account that we would have within the company. We have extended credit to our customers. Do any of you remember Scrivener's when it was here? That was one of my favorite places to shop. It was everything. And it was a hardware store, a fabric store, a gift store, a card store. Do y'all remember? It was down on Broadway. And if you bought something at Scrivener's, you had to, yeah, some of them are too young, right? I loved that store though. Oh, and it had a little tea room. But when you purchased something there, it was all by department. So you had to take it to that department to pay for it. You just couldn't pay for it at one cash register. It was each little department. And they had credit for their customers. It was a Scrivener's account that you had, that you would charge. Not like your Penny's card or your Dillard's card, where we're making a payment to like a credit card company. There's a processing company that used to be out on, I think that was on Stone Road, or Nacogdoches, I think. I used to take my students there when I was at Madison so that they could see how they processed payments for, I think they did J.C. Penney, they did Lane Bryant, and it was one center where all of the payments came from. So when you look at your credit card statement, if it's from a specialty store, it may have the same address as where you're sending your Penny's payment. And it was all processed right there. Fascinating company where they processed all of those payments. One interesting thing they always said is if you used a staple or a paper clip or you had a metallic address label, it delayed your payment. So good to know because it kicked it out. The computer kicked it out and somebody had to hand open that instead of opening and taking it was all automated, that the check and the payment slip came out of the envelope at the same time. So don't use the metallic address labels or use a paper clip. A lot of times it says do not staple. But when we talk about sales and cash receipts, that is credit card or cash. When we talk about accounts receivable, that is an account within that company where we've extended credit. We're going to record and post the sales transactions. We're going to put it in the general journal, but if we used a specialty journal, we would have a sales journal and we could have a cash receipts journal. All right, but we're going to put everything in the general journal. We're going to prepare and journalize and post a credit memorandum, recording and posting cash receipts, record to the accounts receivable subsidiary ledger, and prepare a schedule of accounts receivable. So those are the things we're going to do in this chapter. When we talk about the type of business that we're going to be working with, a retailer is a business that buys items from manufacturers and wholesalers and resell those items to their customers. Gross sales, cash or charge sales, rung up or recorded in a register. And there's just our rules of debits and credits, what the T accounts would look like: cash, asset, accounts receivable, asset. Sales is our revenue account, where their normal balance is, and then what the T account looks like whenever we're recording that transaction. We had cash, that's cash and credit card, and then we have accounts receivable, credit that we've extended to our customers within our company, and then our total sales. The journal entry to record that, the sales entry, debit to cash, debit to accounts receivable, credit to sales. Make sure those equal before you move on to the next one. Sales for July 18th. The sales returns and allowances. When we have sales, not everybody's going to be satisfied with what they've purchased from us. Some people might want to return it because it was the wrong size, the color wasn't right, it was defective. It doesn't really matter. They're bringing it back. They didn't like it. Sales returns and allowances, either a price reduction or a new product or a refund, contra revenue account. So that's the first time we've seen that. Has anybody ever purchased anything at Anna's Linens? Have you ever tried to take something back at Anna's Linens? Oh my gosh. Don't even try. On Sunday, my daughter and I were shopping, and I bought 2 pillows. They were out in this bin in front of the store. $9.99. I thought that was a good buy, but when I got them home, they didn't match my other pillows that I had out on my front porch, and I wanted them to kind of match. Same, there were different designs, but the color just wasn't right. So my daughter said yesterday, I'll take them back on my way home. My receipt was in the bag, but I put them on my credit card. So when she took them back yesterday, they were on sale. They were $2 less, and the lady didn't want to exchange. I didn't care. I mean, if she would have just given me 2 pillows, but she didn't have my credit card, and so she had to do an in-store credit card, you know, for returning merchandise for the $4 plus the tax. Well, the lady was just having a fit because Laura didn't have my credit card to do it, and I thought, just do an even exchange. But I guess it was already reduced in their cash register, so they could do an even exchange. Now, did they have a specific inventory number for the green pillows and the turquoise pillows? I don't know. Whether inventory had been off, had they taken it back, were all the pillows the same SKU number? Maybe they were different, and maybe that's why she was having such a fit. But don't try to take anything back, unless you're the person taking it back and you're the person that purchased it, and you have your card. So, anyway, it was just that I didn't like the color. The color didn't match. So our customers can return things to us for any reason, and we'll call that a credit memorandum. The debit is sales returns and allowances, and we're crediting accounts receivable. Accounts receivable has a normal balance on the debit side. This was a credit memorandum. Now, Michelle Reese owes us $10 less. And we didn't have any sales tax involved in that, but if we have a return, don't you want the sales tax back? Remember, when we collect sales tax as a vendor, as a company, we are just the keeper of that sales tax until we make our payment for the sales tax to the state. It's a payable account when we collect the sales tax. So when our customers make a return, we want to give them that amount back, either in cash or this person charged it, so we're crediting accounts receivable. But if we had sales tax, we need to include sales tax. Now, in the problems in our book, if you have sales tax, you're not going to have a discount. But when we do Paula's Boutique, remember that's the one I made up, I have sales tax and I have discounts. So I put them together, and it makes it a little bit harder. You've got to really think, because when we give a discount, we don't want to give a discount on the sales tax. Now, what if Michelle Reese paid us on time and we gave her a discount when she makes a payment? We want to give her a discount on the amount that she purchased minus the $10. We don't want to give her a discount on that $10. We also don't want to give her a discount on the sales tax if we had sales tax added to that. We're just the keeper of the sales tax. It's not a profit for us. We keep it, we send it in. We're the collectors, and we don't. It's not revenue for us as the company. The seller's view of a merchandise company, sales discount, sales returns and allowance. It's a contra revenue account. Where's its normal balance? On the debit. It's opposite the revenue. Carol.
So we always keep that separate from the sales returns?
Which one? The sales tax?
Yeah. Yeah.
We'll keep it separate. We'll have two accounts. We don't have sales tax yet, but we'll have our sales returns and allowances. We'll also have a purchases returns and allowances. That's why I think these two chapters go together. We're talking about sales right now, but we'll have sales tax, we'll have sales returns and allowances, we'll have a sales discount. We also have to pay tax when we purchase something. And then we'll have a purchases discount because we may not be satisfied with everything we purchase, or something might be defective, it might be the wrong item. And then we'll have a purchases discount. If I pay on time, I want to take my discount. When I worked at the hardware store, we'd have people that would take their discount whether they were entitled to it or not. It's very hard to try to get it once they've subtracted it from their amount. Right? You just kind of have to write it off. Now, when we get to purchases, sometimes those discounts are a huge amount depending on what size company it is. And you want to make sure that you take that. My husband has to approve all of the purchase payments where he works, and he gets livid if they don't take the discount. He wants it paid on time or early so that he can get the discount. I used to have a student in one of my classes that worked at Bates Container here in town, which is a cardboard company, cardboard box company. And when I talked about Steve's and Son, she said, oh, they're a customer of ours. And she said, they always paid on time because he wants the discount. That's the company that we went to dinner with the other day. And my husband got the discount. He got the discount check. It was a huge amount. I don't remember right now what it was, but it was a huge amount. He wants that discount. Does he get to keep it? No. But it goes to the company. But he wants it paid on time. He wants the accounting office to work overtime to pay things on time. If it's a huge company, it's a big difference when you're making that payment. So you want to make sure that with our sales, with our discount, that we give that to our customers if they're entitled to it. My hardware customers took their discount whether they paid on time or not. And is it worth trying to collect just a few dollars? We usually just wrote it off and put it towards the discount. The discount period is the time when a discount is granted, and we'll look at the terms of that sale to see whether they have to pay us in 10 days, whether they have 15 days, whether they have until the end of the month, and we'll look at those terms in just a minute. The sales discount is the percentage reduction on the invoice for prompt payments, contra revenue account. It just went one too far. The seller's view of a merchandise company, the discount period, it's the time when the discount is granted. Here's some terms, 2, 10, and 30. Bless you. We get a 2% discount, or our customers, because we're talking about sales, we give a 2% discount if it's paid within 10 days, and then the total amount is due in 30. This one is no discount, full amount for the bill is due within 10 days after the end of the month. So we didn't give a dollar amount here. Credit period is the length of time allowed before that payment is due. Usually it's the 30 days. But we could make this whatever we wanted, couldn't we? If we had a really good customer and we needed to extend them credit for 60 days, maybe we would. Maybe we wouldn't give them a discount because we're extending it to 60 days. But if they pay within 10, this is what Tom likes. He wants to take that discount. 2%, we don't think that's very much, but if it's several $100,000 or $1 million in a purchase, that's a big amount. So you want to make sure that you took that. The seller's view of the merchandise company sales discount, this is what the transaction looks like. If you can remember, the accounts receivable, we want to zero that out. So this is the total amount that Michelle owes us, minus the $10 that she returned. Wasn't the total amount 50? Now she owes us 40. The discount plus the cash should equal the amount that she owes us. She's paying us less cash because we offered her a discount. This one's not very much, it's just 80 cents. And we need to make sure that those two debits equal the credit. This is where we need to really look at the dates. In our book, it will tell you that it paid within the discount amount. In Paula's, it doesn't tell you. You have to count it up. You might have to do this, know whether there's 30 or 31 days. Count on the knuckles to see whether it was a 30-day or a 31-day month. There's the T accounts for that transaction. Sales tax payable. Remember, we are just the people that are collecting the sales tax. Once it's time for our sales tax to be paid, we'll need to transfer that money to the state for this amount of the sales tax that we've collected. Taxes are collected on sales and forwarded, and our book tells us what day that is. Remember that binder that I brought in here? It would have the date on there when you need to pay your sales tax. This is a liability to the retailer or to the company that's making the sale. Sales tax on a cash purchase is calculated as follows. If our sales tax is 0.05, and what's our sales tax here? 8.5 now? 8.25? What was 8.25? Kimberly, is it 8.5?
I thought it was. I could be wrong.
It's 8.25.
Have you ever shopped out of the forum?
No.
Because the sales tax is different in different stores. Because of the boundary where that store is, San Antonio and whatever the next community is at. What is it, Andrew?
It's 8.25.
8.25. Do we pay taxes on groceries here? Certain items. If it's a snack food, if it's not a food item, we have to pay tax on it. But in some states, you pay tax on everything, even your food. We don't owe taxes. Here the amount, and I'm not going to ask you to divide that up when we're doing our problems, but we'll just calculate the tax on the total amount. So here's the $1,800 times the 0.5. You might put that in your calculator just to see if you can come up with the $90 sales tax. So that sale is going to be $1,800 plus the $90 for the tax, making a total of $1,890. What is the accounts receivable amount going to be? $1,890, because we want to make sure we collect that $90 also. Okay, so $1,800, that would be the sale amount, and the sales tax payable will be the $90. but the total amount that we want to receive is $1,890. Here's how the sales tax on the charge sales are computed. $1,200 times 0.5, $60, $1,200 charged, plus the 60, the accounts receivable will be that total amount, $1,260. There's the transaction for that. The cash amount, the accounts receivable, the sales tax payable, and then the sales. We had cash sales, we had charge sales, not credit card sales, but charge sales. And then our sales tax payable, and then our total sales. The debit should equal the credits. What kind of an entry is that in the journal? Compact. It's getting a little bit more complicated now. We have 4. Right, there's just the rules of the debits and credits, what that would look like in the T account. Transactions on account for Arts Wholesale Clothing Company. Arts Wholesale Clothing Company is a wholesaler, buys merchandise from suppliers and sells it to retailers who in turn sell it to individual consumers. The following transactions occurred in April for Arts Wholesale Clothing. Sold on account merchandise to House Clothing, $800, terms 2, 10, and 30. Right, let's go back to that one. All right. How much do they get? What's the discount? 2% if they pay within 10 days. The total amount is due in 30. On the 6th, sold on account merchandise to Evans Company, $1,600, terms 2, 10, and 30. And when you're recording it in the journal, I would write the terms in the journal in the description part, so you don't have to keep looking to the problem to get the information. And there's enough space there to do it. On the 12th, we had a credit memo number 1 to Evans Company for returned merchandise, $600. How much now does Bevins owe us? $1,000. On the 18th, sold on account to Road Company, $2,000, terms 2, 10, and 30. 2% discount if they pay in 10 days. And on the 24th, sold on account to Road Company again, $500, 2, 10, and 30. Sold on account merchandise to Mel's Department Store, $900, terms 2, 10, and 30. Do the terms have to be the same for everybody? No, but most of our problems will have it the same. But we could offer a bigger discount to our favorite customer if we wanted to, or one that had a very good record with making payments for us. And then on the 29th, sold on account merchandise to Mel's Department Store, $700, 2, 10, and 30. That's what the transactions are going to look like. So when you get to Paula's, we're going to have some tax built into that. Here's just an example of an invoice. Sold to House Clothing, the date of the sale. There's the terms. 2, 10, and 30. It's shipped to the same address, sales invoice number 1. In a business, when this is purchased, and it's sold to House, so House is going to have someone that verifies that we received 20 of the men's dress shirts, the 16B, 10 of the ladies' designer jeans, 50 of the baseball caps. Someone needs to verify that that's okay and then approve this to be paid. Okay, and that's for Hales. Arts Wholesale is the person who's making the sale. Someone's got to double check that that's how much went out. Does anybody do that in their job? What are you checking?
Actually, all sorts of stuff, including clothing from distributors that are, the packing slips actually look pretty similar to that.
And usually the invoice, the packing slip, the receipt, they're just, it used to be carbon forms, if you remember carbon is. One was yellow, one was pink, one was green, one was white, you know, and then everybody got a copy of that. Now I'd say a lot of it is computerized, and if we print it, we would just print the 4 copies. It might not be a different color, but it might indicate whose copy it is.
Also, another way the credit memorandums can play into this is that, let's say you got 19 in that shirt. Well, generally the distributor's not going to package one, they're just going to credit you with 20 copies.
And a lot of times, they'll just take your word for it. If you say, I didn't get this item, I know when I place my orders with Mary Kay, if something's short, I can usually just call them and say, I was short 2 items, and they'll just send it right out. They don't ever adjust my bill, they just send it out. Or the box was damaged. I don't ever have to send that back if the box is damaged. So you want to keep a good relationship with your customer that's buying things, but if it's always that same person that says I'm 5 short of those baseball caps, you might question, okay? And you can keep a record of that if you were computerized. You know, how many returns they had. It's always the same person that calls that says that they're short. You might not offer a discount again. Maybe that's a customer that you really don't want to keep. But true, if you were short, if you only got 49 of those, you may just adjust their bill and not mail one out. Okay. On April the 3rd, sold account merchandise to house clothing, $800, $210 and $30. This is where I would put the terms. I would just write it down there so you wouldn't have to keep looking back to the problem. Here's the comma. I just like the diagonal here, and I want the diagonal here. When we post this, we're going to post to accounts receivable and to house clothing. So we'll post it twice. Sale on account to Hales, and we could have more than one sales account. I don't know what were we selling? Baseball caps. And so we might have a shoe sales, we might have hat sales, we might have it divided. It might not all just go into the account sales. We might have several revenue accounts. Accounts receivable subsidiary ledger. Now we've used accounts receivable since the very beginning. That is money that's owed to us from our customers. Now we're going to have a subsidiary ledger that will have an account for each one of our customers that are using store credit. Not ones that have just a credit card, but ones that we're offering credit to. It's a special ledger. It contains one type of account. It's going to be our accounts receivable. We'll have a separate account for each one of our customers. It's usually arranged alphabetically. It usually has an account number, but this book does not use account numbers or subsidiary ledgers. It can be in the form of a file, a notebook, computer tapes, or discs, or USB, posted to the general ledger and recorded to the subsidiary ledger. Have to post the transaction twice. Once to the controlling account, accounts receivable, and once to the customer's account, whatever their name might be. It looks kind of like this. On the left is not all of our accounts, but part of our ledger, starting with the sales returns and allowances, sales discount, sales, and then we have our inventory, and then we have the account called accounts receivable. The accounts receivable is called the controlling account. And then Rowe, Mel's, Howe's, and Bevan's, those balances added up will equal what's in the controlling account, accounts receivable. And we're going to do the same thing with accounts payable for our vendors. So it's going to look the same way. It still has a controlling account, and and that's an account we've used since since chapter 1, or at least chapter 2. We've had the names for some of our transactions, and I've asked you to use the diagonal because I told you eventually we would need to post those to both accounts. We'll post as a total to accounts receivable, and we'll post individually those totals to Rowe, Mel's, House, and Bevins. Okay, so we're posting to both of those accounts. The accounts receivable subsidiary ledger, the general ledger account, is called the controlling account. It summarizes or controls that subsidiary ledger, and the total of the individual accounts equal what's in that controlling account, the ending balance. Here's just how the transactions would look. We don't have the detail there, and I really would like for you to put the detail, what the terms are, so you don't have to keep looking. Unless the terms are the same for everybody, then you'd know it's 210 and 30. I really prefer the diagonal, and then I want you to put the diagonal here, because to speed things up on our demo, we'll only post to the accounts that have the diagonal. It'll just save a little bit of time. On the 12th, we had a credit memo. We have a credit to accounts receivable for Bevins Company. And if we had a ledger and we're posting after each transaction, we would know the balance in each one of those counts immediately. If we're not, and let's say Bevins calls us and it was $1,600, but then there was a return of $600, we'd have to go back to the transactions to see what the balance is. We were using Peachtree or QuickBooks. As soon as we clicked on save, it would post and we'd know the balance in that account. Here we'd have to look back. What's the balance in the Bevins after the return? $1,000. Posting and recording the sales transactions. We'll never get past the posting. It takes a lot of time to do the posting. In the demo, again, we're just posting things that have the diagonal. In this book, our accounts receivable do not have account numbers, so we'll just put a check mark to indicate that we posted. You might have an account number. I wish we had account numbers, and I don't know why he chose not to have account numbers here. And that shows that we've posted those transactions. Posting and recording the sales transactions. If we want to refer back to where that came from in the journal, our posting will give us that. GJ1 or GJ2, whatever page it is. And then when we look at the ledger, we'll know where we posted, what page that came from. And then when we go back to the journal, we'll know exactly where we posted that, what account we put that in. Here's our accounts receivable subsidiary ledger with everything that's posted. And then there's our accounts receivable. If we ruled that controlling account and added these up, the number should be the same. Preparing and journalizing and posting a credit memorandum. We've got to let the customer know that we're making a change to that amount, whether it was that we were short a baseball cap and we're changing the amount of that order. Indicates the amount of goods that were returned or amount allowed for the damaged goods. We could have given them a discount, a total amount, just to say, if you'll keep that item or can you use that item, and we'll just reduce the cost. Some of them might say yes. You ever take something up when you're trying to purchase it and it has a button missing or a little hole in it and you say, can you offer me a discount? You've got to keep a record of that. I was at Joann's Fabric this weekend, and if you're buying the last part of their bolt of fabric, if it's under a yard, they'll give it to you for half price. So somehow they need to write that up on their ticket, that that last part of that bolt they gave it to you at a discount. So it's something that we've got to keep a record of it, or our inventory's not going to be correct. The amount is subtracted, or we call it credited, from the customer's account. That's the credit memorandum. Here's just an example of what a credit memorandum might look like. Merchandise returned, 60 model 8B men's dress gloves, $600. Sales returns and allowances, what kind of an account is that? Contra revenue. Posting and recording of the credit memorandum. Again, we're using accounts receivable, diagonal the accounts receivable company, and then after we post, and we've already posted this one, there's a check mark there. No account numbers. Cash receipts. Cash receipts on account are journalized for the month, posted to the general ledger, posted to the accounts receivable subsidiary ledger. Here's just some transactions and how they'll look. Bart Nooner invested $8,000 in the business. On the 4th, received a check from House Clothing for payment of invoice number 1, less the 2% discount. So they're telling us how much it was. Cash sales for first half of April, $900. Received check from Bevan's Company in settlement of invoice number 2, less returns, and a 2% discount. If we have a return, we have to subtract that from the amount that is owed us and only calculate the discount on that new amount. They'll give them a discount on the amount that was returned. On the 22nd, received a check from Rowe Company for payment of invoice number 3, less the 2% discount. Sold store equipment, $500. Cash sales for second half of April, $1,200. Here's what it would look like when we receive the cash. If we're giving a discount, the cash we're receiving is less. So the cash plus the discount, this should bring House Clothing to a 0 if they paid it in full. When we post to the subsidiary ledger, and that's just all of our journal entries, or some of those from that list that they just gave us. There's what the T accounts would look like. Bevan's is at 0. Howes is at 0. Mel's department store still owes us, and Rose still owes us. Cash receipts transactions occurred for Arts Wholesale Clothing in April. Cash, store equipment, cash, sales. So we're going to have a mixture of transactions as we work through these new problems. The author is assuming that we'll remember what we did with those other transactions. What would be the description if you had to record this in the journal, in the problem? Isn't it just like this? Sold equipment for cash. Does it matter who we sold it to? No. They might give us the company name, but do we need that company name if it's not in accounts receivable? So they might be giving you a little bit too much information, and on Paula's, I'm giving you too much information on some of those transactions also. What the T accounts are going to look like after we post all of those. Again, Bevan's is a 0, Howes is a 0, Mills and Rowe are the only accounts receivable that we still have a balance for. Remember, those two accounts. The last thing we're going to do is to prepare a schedule of accounts receivable. We had two accounts receivable accounts that still had a balance. We don't need to list the zero ones, only the ones that have a balance. The end of the month, April 30th, we had Mills and Rowe Company, total accounts receivable $2,100. How do we know that number is going to be correct? Where can we look?
Controlling account.
The controlling account. Accounts receivable to make sure that that's the correct number. If it's not, we've posted something incorrectly, or maybe we didn't post something. Right, there's the controlling account. This is the T account, and you can see we put it in and it's $2,100. Schedule of accounts receivable, there's just another one. October 31st, total accounts receivable $4,300. It's the name of the company, the name of the form, and then the date, and it has a specific date on it. This is all of the summary at the back of the chapter. There's lots there. If you haven't read chapter 9, go back and read that. I think the PowerPoint covered just about all of the things that were in there. We're going to look at 9A2.
Still recording? Yeah. A2 in my book is on page 362. Yours might be 360. We're still off 2 pages. It should be Jack's Auto Supply. All right, 9A2. It says the following transactions of Jack's Auto Supply occurred in November. Balances as of November 1st are given for general ledger and accounts receivable ledger. Danielson is $400, and I think I've already put the amounts in there. Will you go to Danielson to see if I have those amounts in there? I do, don't I? I've already put those in for you. The next one is Wallace, $550. Whitnall, $400. Accounts receivable, $1,350. Sales tax payable, $1,900. Do I have all of those in there in the demo pages? Okay. If they weren't there, you would write balance, check mark in the post reference, and put the balances in. And this problem told you whether it was a debit or a credit. Be sure to enter these balances in your working paper, especially before beginning. And we have November 1st, November 5th, November 8th, November 10th, November 12th. look up on the next page, it says required. Number 1, we're going to journalize the transactions. We're going to record to the accounts receivable subsidiary ledger and post to the general ledger as appropriate. Prepare a schedule of accounts receivable for the end of November. Now, for demonstration purposes only, we're only going to post the transactions that have the diagonal. Okay, as we do it, so make sure you put the diagonal in. Let's look at November the 1st. Sold auto parts merchandise to R. Danielson on account $1,600, invoice number 50, plus 6% sales tax. Okay, we're going to record that sale. What is going to be our debit? Accounts receivable, diagonal, R. Danielson. What's going to be the credits? Sales. And one more. Sales tax payable. What is the amount of the sale? $1,600. Now for the sales tax, we have to multiply 1,600 by, what did it say the sales tax was?
6%.
Is it 6%? What number would that give us? $96. So R. Danielson owes us $1,600 plus the 96. Let me make it just a little bigger. So we have accounts receivable, diagonal, R. Danielson, diagonal in the post reference. Sales is our credit. Sales tax payable. Oh, and I listed auto part sales. That must be the proper name that's in the ledger instead of just sales. So you might have to look in the ledger to see what that correct title was for that account. Sold Danielson, invoice number 50. Did we have any other information? Like, were there any terms or anything? There wasn't. But I did put invoice number 50. When Danielson gets ready to pay, their check might say invoice 49. Maybe they had another purchase that they made before that date. So we want to make sure we apply it to the correct invoice. Okay, so this was invoice 50. Make sure that your two credits equal your debit, and we want to collect from Danielson the amount of the sale and the amount of the tax.
Does it matter if you put sales tax before the sales or the sales
No.
before?
It doesn't matter what order, as long as you have them both there. When you were even in Peachtree, it's probably not even going to put that in alphabetic order when you do it, when you record it, because you're manually entering that. So it doesn't really matter. We just want the debit first in the transactions, but the credits don't have to be in a special order. Now, that's not to say that you might not work for somebody that wanted that to be in account number order, and you could. Just make sure your two credits equal your debit, and then please put your diagonal right here, because when we get ready to post, we're only going to post those. Right? Let's skip a line and let's go to the next transaction. sold auto parts merchandise to J. Wallace on account, $850, invoice number 51, plus 6% sales tax. It's the same transaction. Accounts receivable diagonal J. Wallace is our debit. Auto parts sales, how much were they? $850. Sales tax payable, you have to multiply it. What is that? 51. So accounts receivable diagonal J. Wallace. J. Wallace owes us $901. Notice my diagonal, accounts receivable diagonal J. Wallace, 901. Sales tax payable, again, it doesn't matter which order you put that in. Auto parts sales. Make sure your two credits equal your debit before you go to the next one. My description was sold Wallace, invoice number 51. On the 8th, sold auto parts merchandise to Lance Whitnall on account $9,000, invoice number 52, plus 6% sales tax. Let's see if you can do this one. Multiply it. The sales tax was 6%, and then we'll check it. Your transaction on the 8th should look like that. On the 10th, issued a credit memorandum number 12 to R. Danielson for $850 for defective auto parts merchandise returned from the November 1 transaction. Be careful to record the reduction in sales tax payable as well. If R. Davidson returned $850, what would the sales tax be for that return? Did you get 51? Okay. So we're going to reduce the amount that R. Davidson owes us by the amount of the tax and the amount of the items that were returned. Right? Remember, we are just the keeper of the sales tax that we've collected. We're not entitled to that if a person makes a return. And think about how you would want to be refunded if you took something back to the store.
you'd want the tax back on what you had returned. So there's our 51 as a debit to sales tax payable. The sales tax payable has a normal balance on the credit side. We're reducing sales tax payable by 51. We're also reducing the accounts receivable for R. Davidson by $901. Accounts receivable has a normal balance on the debit side. To reduce that, that's our credit. And sales returns and allowances will be a debit. Is it small? For $850. Make sure your two debits equal. Put your diagonal in there for accounts receivable R. Davidson. And then think about what you just did there. R. Davidson no longer owes us for the items that they returned, nor for the sales tax that we were going to collect and that we have to pay for. So we have to give them back the sales tax and the refund for the items that they returned. Our credit to accounts receivable, R. Davidson, this includes the tax and the items. Where's the normal balance for sales tax payable? Debit or credit? Credit. And the word payable should help you remember that. It's a liability. Assets equals liabilities plus owner's equity, the accounting equation. Liabilities are on the right. I think you have to think a little bit about the transactions where we're making a return. Which one's the debit, which one's the credit? Just remember the diagonal also, because we're going to post the third part of that transaction twice. Accounts receivable and R. Davidson. On the 12th, we sold auto parts, merchandise to J. Wallace on account, $750, invoice number 53, plus the sales tax. They're being kind to you and they're reminding you that you have sales tax. Some of the others won't. It'll just tell you in the problem that there's a 6% sales tax on everything. How much does J. Wallace owe us on the transaction on the 12th? $795. Okay? There's what that transaction looks like. Accounts receivable diagonal, J. Wallace. Sales tax payable was $45. Auto parts sales, $750. Now, if you will just quickly look at your transactions, you should have the diagonal on the line that says accounts receivable diagonal R. Danielson. There should be a diagonal in the post-reference column. On the 5th, you should have accounts receivable diagonal J. Wallace and a diagonal in the post-reference column. If you don't, put it in there. On the 8th, accounts receivable L. Whitnall, you should have a diagonal in the post-reference column. On the 10th, for the credit, you should have accounts receivable R. Davidson and have a diagonal in the post-reference column. And then the last one, you should have a diagonal on the line for the 12th, accounts receivable, diagonal J. Wallace. Now, to speed things up, we're going to post, but only post the items. Why doesn't that show? Only post the items with the diagonal in the post-reference column. You have some debits and you have some credits. So let's just post the items that have the diagonal. And I'll give you a few minutes to do that. Remember, tonight is my guest speaker in my Applied Accounting Topics class. You are welcome to come. You just need to RSVP me or let me know that you're coming. I think I have about 23 that are coming, and we're planning on 25. So just let me know if you think you're going to come.
How long will it last?
What?
How long will it last?
He's going to start at 6:30, and he said he'd like to be finished by 8:30. He's probably going to talk for about 45 minutes, and then we'll have question and answer. So it could be even shorter than that. I've told the students in my class to plan on, they have to be here at 6. You might have to come at 6 to get a parking place.
Can you park anywhere at all?
You can. You can park anywhere after 5. Even out in the faculty parking. But you have to get here early to get a place.
What time do classes start?
Not 6. Okay, so take a few minutes to post. The Texas Society of CPAs did send me some gift items for you all for tonight, so they sent me 25. The subsidiary ledger accounts have the 2 columns over to the right that have a balance that, just like your ledger accounts, you'll keep a running total of the balance. Yes. You're posting it twice, they don't change. They're both going to be exactly what you have in the journal. No difference. Accounts receivable is a debit. And then total, because it should be the balance that you already have. And if you'll look at the accounts receivable, I only have a debit balance on there, don't I? I didn't list the credit card. And then put your account number and then your check number. Right, but now it's coming from the journal. This was just a balance, yeah. GJ, whatever. What page journal was it? 2? Okay, GJ2 will be your post reference number. Don't forget how to post. There's 5 steps. And remember, we're only just posting the ones with the diagonal to speed it up a little. For the homework, you'd have to post everything.